I'm LARPing it as a geopolitical expert here, but
Exactly.
it does seem like shutting down that critical point. It's like poking the eye of Sauron, and you're just asking for trouble. Welcome back to the weekly Bitcoin.com's no BS recap of what actually mattered in crypto. I'm Graham Stone here with David Sensel, and this week we're diving into yet another dangerous geopolitical flashpoint and what it means for Bitcoin and crypto, because that's what we talk about here. Plus, we'll be looking at Stripe's acquisition of Privy and what it could mean for Web3 adoption. Before we get into it, a quick plug for David's weekly newsletter, which is the smartest 5-minute read in crypto. Subscribe to it, totally free at bitcoin.com/newsletters, and check your inbox every week on Friday. Let's do this, David.
Yeah, so just before I start, let's remember where we were last week. The Ukraine had just done a crazy, ridiculous drone attack, right? Taking out 40% or something of their nuclear-ready fleet. That was dominated the headlines last week. What the hell is going on here? And then here we are a week later. Good Lord. Just to keep in mind, like what's been happening.
Yeah, absolutely. The drone attack that wiped out half of Russia's nuclear-equipped air force is like an echo of the past at this point.
Yeah, I mean, it's wild to think. So here we are, though. And on last Thursday, Israel initiated a large-scale preemptive strike targeting over 100 sites across Iran, including nuclear facilities. There's that nuclear thing again. Military installations and presumably key figures in the Iranian chain of command. The Iranian government has reported that they were successful in killing some of these key figures. Major U.S. equities plunged on Friday. Bitcoin and other risk assets also went down. At the same time, gold went up, safe haven, and of course, oil went up as well.
And Iran responded later that day and over the weekend by launching ballistic missiles and drones at Israeli targets. The attacks targeted cities including Tel Aviv. And by Sunday, Iran intensified its missile strikes on Israeli cities. Israeli forces continued targeting Iranian military sites, including missile depots and nuclear facilities. So,
on a side note, Graham,
it seems. Yep.
Yeah. So I lied when I said I unplugged completely. But did you see some of these just surreal videos of DJ in Lebanon?
I heard about that. I didn't see it though.
You haven't seen it? Oh God!
No.
As the Iranian missiles are going from Iran to Israel, there's a DJ who's playing just club music, and you just see the missiles going overhead on their way.
Yeah, that's dystopian.
Dystopian, man. It's wild. Anyway, so aside from the conflict, of course, we also care about like the potential economic impacts. Let's start with the most important one. Iran has threatened to close the Strait of Hormuz. It's done this many times before, but here it is again. As of now, the likelihood of Iran blocking or closing the Strait of Hormuz has reached about 40% on Polymarket. Sorry, it was 40%. It's down to 35% today, which is more than double what it was in the middle of May, 14%. For those that don't know, the Strait is a vital conduit for up to a third of global oil and major LNG shipments. So it's critical to the world's energy markets, and experts warn that even temporary disruptions could drive up oil prices above $100 a barrel, which could trigger economic stagnation or recession worldwide. Now, again, Iran has previously threatened this, but it's never closed the strait, I believe. This time could be different, though, because Israel's destruction of key nuclear infrastructure may have crossed Tehran's red line. Probably the number one thing to pay attention to.
All right. So what does JP Morgan have to say? The bank's global investment strategy group warned that escalating Israel-Iran tensions pose a short-term threat to investor sentiment as oil prices surged over 7% following Israel's strikes on Iranian nuclear military sites. Importantly, despite the volatility, the bank remains optimistic about the broader economic outlook, citing strong U.S. economic indicators, flexible U.S. shale production. So that's the U.S.'s main oil production mechanism, shale. And also citing OPEC plus spare capacity as stabilizing forces. However, JP Morgan acknowledged that threats to key oil transit routes like the Strait of Hormuz could still provoke further price shocks. So confirming what you indicated there, David. And JP Morgan also advised investors to brace for continued market uncertainty and emphasized portfolio resilience through diversification into uncorrelated assets like gold, infrastructure, and hedge funds.
Not to belabor the point, but the Strait of Hormuz is a key focus. In this article, security experts are warning that if the strait is closed, it could be catastrophic, especially for Europe, potentially slashing up to 20% of oil supplies. This would spike prices and have major effects in Europe and Asia. Oil futures have already surged past $70, reaching 77 because of these global tensions. These security experts warn that this could trigger a global recession. Something of note, though, is most of China's oil goes through the Strait of Hormuz, and China and Iran are reasonably close allies.
Interesting. That does seem like a contributing factor to what ultimately happens here. All right. So another key question here is how involved will the U.S. get in this whole conflict? Obviously, they're already involved to some extent, having green-lighted the Israel's attack here. Now, in a brief exchange reported by ABC's Rachel Scott this weekend, she asked Trump about Israel's push for American support in dismantling Iran's alleged nuclear program. And he said, "We're not involved in it. It's possible we could get involved, but we are not at this moment involved." So, all right.
Classic Trump phrasing. Yeah. Let's put on our Middle East strategic hats just for a very brief second. What are your thoughts on the Strait of Hormuz thing kind of materializing? I think the poly-market odds are way too high. I think 35% is overstating it, actually.
Yeah, I think, look, I'm LARPing as a geopolitical expert here, but
Exactly.
it does seem like shutting down that critical point it's like poking the eye of Sauron, and you're just asking for trouble. And
Also, all maybe Iranian allies in the Middle East, right, who make all their money through oil, they'd be like, dude, what's going on, man? Come on, we still got to make money over here.
Yeah.
All right. Anyway,
yeah, true.
So
on the other hand, the more the price of oil spikes, the better it is for those allies, right? Whose economy is
mixed.
Primarily based on oil exports.
It's mixed, right? It's an equation. It's how much can they get out at what price, right? So they could even though the price goes up, if they can't sell as much, then they could lose money. The other problem is, though, dude, with oil that like most people don't think about is most of these countries, they can trim the supply of oil that they're producing, but they can't stop it, right? You can't just turn it off. And so if their reserves start to fill up, they just have to start dumping it on the ground, right? Like
or burning it.
Or burning it, yeah, right? Like Anyway, so escalation, though, I think this is something that we could actually talk about because it impacts Bitcoin and crypto and all assets. We're currently in a kind of a tit for tat, right? We're sending missiles and drones. There's no kind of face-to-face forces, so ground forces, and the U.S. is not involved yet. I think, just to start it very simply, if we continue on like this, tit for tat, I think the worst of the price move has already happened, right? As in this risk is already priced in. And if things escalate, either ground forces or whatever, or U.S. involvement, I think you might see another leg down.
Yeah, I think so. Actually, just to add to that, if things stay pretty much as they are, not only have we seen the worst, but I think we're going to see a recovery quickly back to where we were like 5 days ago. So in terms of Bitcoin, like close to 110K. But yeah, as you say, if it gets worse, probably going to see another dip.
Yeah. And maybe the worst thing that could happen actually is if they do try to close the Strait of Hormuz. That's a weird thing. I think, you'd see oil price spike up. And I imagine that would cause Bitcoin to go down with equities, right? Risk assets are not going to like an oil shock, basically, right? So I think that might be maybe one of the worst things. I don't know. That ground forces, I don't know. It's something like that. Yeah.
One interesting thing to note here is this post from Mohammed Elarian, who is the chief economic advisor at Allianz. I believe that's a large European investment bank. And he says the 10-year yield's noticeable rise today further reinforces the historically unusual behavior of U.S. government bonds. So normally when there's geopolitical uncertainty like this, investors tend to flock to U.S. Treasuries as a safe haven, which drives the yield down on especially the 10-year note. And the fact that they spiked on this news, see they've come off a little bit here, but they did spike on the news, indicates that the investors are not looking to U.S. Treasury as a safe haven asset as they once did. And yeah, they're as we saw, like gold spiked. Now, the question for our purposes is what happens to Bitcoin? And surprise, surprise, Hunter Horsley, Bitwise CEO, noting that this actually what this does, in his opinion, is it increases the total addressable market for what Bitcoin could be from just what gold was, which is already 10 times the size of Bitcoin's market, to now U.S. Treasuries. Right. So if people are moving away from U.S. Treasuries as a safe haven asset, where are they going to go? Yeah, gold, but also Bitcoin. So the total address, like the potential for Bitcoin is not just gold, but also the $30 trillion U.S. Treasury market that, according to Hunter Horsley, Bitwise CEO.
Yeah, I mean, this to me is obviously strange. Some of the financial people I follow, like Mike Green, famous for the passive investment stuff at Simplify, and Brett Johnson, Dollar Milkshake Theory, Santiago Capital, and there's some others that I've talked with or listened to. They tend to think though that what happens, and apparently this plays out in the past. What happens when U.S. Treasury yields spike, right? Let's say they're at 5. Let's say they go to 6 or 7 or 8. So what happens in the world at that point? Do people flee treasuries or do they start buying them nonstop, like by the fistful? And they say that the treasuries will work like a free market is supposed to. The interest rate goes up because people don't want to buy it or they're dumping them. And then at some point, they start buying them a lot. Right.
Yeah, well, there has to be a point where the yield offered by these long-term bonds is juicy enough to entice people to move out of risk assets like equities, Bitcoin,
so
whatever.
It's interesting. It's interesting.
Yeah.
It's an interesting dynamic, and this is way above my head, so I don't really have any kind of basis to know or hunch basically. But yeah, I'm watching it, and I want to see how this plays out.
There's a lot of games that the government, the U.S. government, can play here as well. Like I believe they're buying treasuries. They're doing like treasury buybacks or something.
Well, that's normal. That's normal. That's a normal thing that all banks do. It has to do with on the run and off the run treasuries, basically. Mm-hmm. Treasuries that are older than the year in which they're issued in have far less liquidity, and so treasuries, like central banks or treasuries, often will buy older issuance to keep the stock of treasuries fresher, and so it's a very common thing. And there's a bunch of people on X who are talking about it, and then a bunch of people kind of debunking it as a scary thing.
Okay, but if treasury yields go up to 7%, the U.S. government is just going to 10% of their receipts are going to have to be spent paying interest on their insane debt. So it's like something has to give here on one side or the other. I don't know how it plays out, but as Lynn Alden says, nothing stops this train, and the money printing continues, and the assets with limited supplies, whether it be like high quality stocks or gold or Bitcoin, will continue to increase in value.
But again, so I mean, I'm not saying that she's wrong at all, but let's imagine a world where treasuries go to 7 or 8%, which is like a catastrophic world, right? That's like we're in World War III, basically, honestly, right? That's the kind of, if they do that quickly, right? What do other countries look like? What does the EU bond issuance look like? I mean, the EU member countries. What does Japan look like, right? They're a basket case right now, right? Are they not just absolutely devastated? I can't even imagine what would their yields be,
Yeah,
and it would just be backbreaking.
So it goes back to
the
U.S.
in China
being,
too.
Yeah, the dirtiest, the U.S. bonds being the dirtiest clean shirt.
Yeah, and it would break these countries, and I think all that capital would flee to the U.S. because it would just break all these other countries, right? And it would just be awful. So anyway, I mean, and again, this doesn't mean that you should buy treasuries or anything like that, or that they're not going to fail. But boy, would it be bad for everybody.
Speaking of things fleeing, I guess the euro. So a recent report by the ECB confirms that gold following a significant rally in 2024, has become the second largest asset held by central banks as a reserve. However, the US dollar still does represent over 46% of all funds held by these institutions.
Pretty alarming news, I think. Contrast that with BRICS. So BRICS has officially welcomed Vietnam as its 10th partner country. This expansion reflects the BRICS' ongoing strategy to strengthen cooperation with like-minded nations in the global south through its partner country framework. Now, these partner countries are not full members, but they closely collaborate. What that means exactly, I don't think is perfectly clear, probably on purpose. I'm a BRICS bear, and there are critics who worry about this current expansion because it kind of challenges the internal cohesion, something that I've talked about a lot. Vietnam, it doesn't have a great relationship with all of the BRICS members and the partners. So let's just look a little bit at these, right? The economic models and interests of these countries in the BRICS. So Vietnam's inclusion brings another highly export-oriented, market-driven economy into a bloc that already includes state capitalist models like China and Russia, resource-rich economies, Saudi Arabia, UAE, Iran, and large democracies with protectionist tendencies like India and Brazil. Market Dynamics 101. If you're an exporter and you are overweight exports, someone else in the world has to be overweight imports. It has to be. It mechanically works like this. It can't not. And so then if you're going to make a bloc that is just basically all export heavy, who else is taking in all this goods? If you're talking about a currency, the way currencies work is the country that is buying more is basically selling their currency to the people who are exporting more goods, right? So America sells dollars to the rest of the world, right? And everyone else wants our dollars, so we buy more of everyone's stuff and we sell them our dollars, right? And that's how the dollar is a global reserve currency. Global reserve currencies have to work like this mechanically. That's how you spread the currency.
If all these BRICS countries are primarily exporters, who's the importer who's buying their currency?
Nobody. It can't work that way mechanically.
Yeah.
It's impossible. It's absolutely impossible. It's just mechanically can't do that, right? Like it's not possible. Anyway, then there's geopolitical tensions among the members of the BRICS, right? Some BRICS members are partners, some are in different alliances. Obviously, India versus China. There's border disputes, strategic rivalries, Iran versus Saudi Arabia, historical regional tensions there. And then Vietnam has uncomfortable stance with China, particularly in the South China Sea. So again, there's this headline that Vietnam is a part of BRICS, and lots of people saying things like, this is a big move and it shows that the BRICS is very, very real and important. But then like you just look at that China and Vietnam are kind of really not friendly. You're like, interesting.
Far from unified.
Yeah. So
unified,
then the point is that the euro didn't work, right? We started with the euro not working, right? And the euro is way more unified than the BRICS countries. And they're not particularly unified though, right? The EU and the euro are not particularly, and now they've been replaced by gold because why not? So I don't know. Okay. I feel like the BRICS, can the BRICS replace the euro? Maybe, but can it be a global reserve currency? Can it replace gold itself? I don't know. I don't know about that.
So the BRICS officially welcoming Vietnam as its 10th partner country. Fake news, basically.
And also just a little strange, right? It just feels a little strange, right? Like, is this necessary?
Our last story of the week, it's an acquisition here where Stripe is acquiring Privy. The deal's not done, but apparently it's basically done. Now, something is brewing here with Stripe. So as you may remember, Stripe acquired Bridge a month or two ago. At the time, it was the biggest Web2 or normal company acquisition of a crypto company, a 1.1 billion or something. Now, Bridge is a USDC, basically a stablecoin infrastructure provider. Stripe acquired them. Now, Stripe is acquiring Privy, which is a leading crypto wallet infrastructure startup. And it powers over 75 million self-custody wallets, serves clients like OpenSea. So what Privy does is it makes it easy for apps to give users a crypto wallet without needing them to install anything or deal with like clunky seed phrases. So like normally when you use a crypto app, you have to install a wallet like MetaMask or like the Bitcoin.com self-custody wallet. You have to manage your recovery phrase, and it is a point of friction for a lot of people. So Privy solves this in a way by letting apps embed a wallet directly into the app experience tied to your email or login. So more like creating an account with PayPal or Venmo. By the way, this is the tech they're using is called a multi-party computational MPC wallet. And so it's self-custodial, meaning you actually do hold the keys to your assets in the wallet. So it's not like centralized. Okay. Now, with Stripe acquiring Privy, it may kill the need for the flow of people using Web3 to go from fiat to crypto to a wallet. And it may make it possible to just go straight from fiat to Web3, like skipping the step, making things easier. So potentially a big shift here in making Web3 more accessible for like newcomers.
I'd also add that so Stripe has their own app, but they also provide infrastructure themselves. So if you're developing the next big Web3 app, you could potentially just kind of plug in Stripe's infrastructure, and then that standalone app just auto-magically can get fiat access, lower fees than like credit cards, much lower fees than credit cards, and including wallet infrastructure. It kind of falls into this whole narrative that you're hearing these days about app-focused, right? App-focused plays and how important these app-focused plays are, which I think is kind of the right way, right?
Yeah, so possibly a headwind for the crypto super app thesis, like that the thesis that you're going to have these crypto wallets as like the thing that everyone needs. Possibly a headwind here for that. You can skip that and just go straight to the app that you need.
Yeah. Also, that's the super app. There are all these companies that are coming at the super app angle from different starting points, like centralized exchanges, for example.
Yeah.
They're vying to be the super app. Robinhood and PayPal even. They're angling at it. Then you have the wallet apps who are angling for it. There's a lot of different things that you could speculate on about this. I think we talked about this before the show. I could imagine a bunch of apps who just plug in Stripe's infrastructure, and then once you've done it once you've entered into Stripe's infra layer once, you don't have to go through it again, right? If another app uses that same infra, it can be just like, oh, I know you. You've already set up a thing.
Exactly.
And so you already signed in. Here's your other wallets here. Here's all the crypto in it. And so it's already voila. You're already connected.
Yeah, not only that, but the sort of the KYC flow has already been handled once by Stripe on the back end, and you could port that across to your other apps without having to go through KYC again, which is another major friction point for retail adoption. Yeah. And then I think one last potential here that people are talking about is that Stripe could potentially subsidize the onboarding of people by some other yield, like through a yield generation strategy on USTC that relates to their bridge acquisition. So potentially they might be able to eat the cost of getting people into this system, which could help them to grow quickly. Are there any downsides here besides Stripe just dominating everything?
Well, I mean, so that's
I guess
that's the thing that has some people concerned is the centralization. Yeah. I don't know. I feel differently about like infrastructure centralization than I do about maybe, let's say, the centralization of Bitcoin into custodial companies and stuff like that. I think infrastructure naturally lends itself to reasonable levels of centralization. And so as long as that you have, and the great thing about this though is you're definitely going to have competition in the space. You'll probably have like that, what's it called, that Pareto distribution, right? Like, so Stripe, for example, might be 80% of the thing, but you'll have a long tail of competitors, right? Even in Web 2, Stripe is not by itself in that space. Yeah,
so that there'll be opportunity for people to win a bigger piece of the pie here. It's not over yet. Still very early. And
if it's bad, if they make a bad product and everything, I think you could reasonably easy see them replaced, right? It's not like the gating that you get in Web 2 in banking, traditional banking and stuff, where it's just you just cut out completely, right?
So hopefully the market keeps Stripe honest here, and ends up the end result will be a good product for users.
Yeah, especially since it's starting with, I mean, as long as it's like this MPC thing and it's self-custodial, that self-custodial aspect means that the user can really easily pick up their crypto and move somewhere else.
Yes, you're not locked in, which
you're
makes
not locked in.
Makes competition. It makes it much easier for competitors to compete.
And also, you know what? Honestly, I could see it like this. You know how if you move from an Android phone to an Apple phone, or vice versa, Apple phone to an Android phone, both of those companies have devoted a lot of software talent to making that transition as easy as possible. Right? Like, hey, are you moving from an Apple phone? Here's an app that takes all your Apple crap and puts it into the Android wrapper. You could see like whatever Stripe's competitor be like, hey, Stripe is not doing a good job. Here's our custom how to move your Stripe MPC wallet seamlessly to another ecosystem.
Yeah,
right.
And that would be actually like a much lighter weight.
Yeah,
a lighter lift for someone to develop that app.
Yeah,
because
it's NPC,
like
it's self-custodial.
It's like this modular thing. So okay, interesting times. I think we're going to be following this story closely and seeing how it affects the Web3 world. All right, David, any last thoughts?
Yeah, now all we need are good crypto apps, Graham.
Yes. Yeah. Final.
That's it for me. What about you?
That's it. I think that's a good note to end on. All right. Nice talking to you, David. And thanks to everyone for listening. See you next week.